Okay, the left side you see a bullish candle, the right side you see a bearish candle, and there is a open, there is a high, there is a low, and there is a close. All right, so the left side, that small dash is the open, which describes that is a point of open, and the right side dash is what defines the closing point of the day. This is a standard way in which charts, the bar charts are defined, and I am sure every one of you are aware of it, and I hope every one of you have seen that particular document which we already shared 1 month ago. Okay, so we do not use basic bar charts, instead we'll use candlesticks charts. So in case of the second candle, which is the bearish candle, it's a red candle. Ideally, what does it mean? It's a red candle means price has fallen. Where did the price open? The price opened at the top. The price opened at the top, and then price closed at the bottom. So price has gone down, which ideally means the price has fallen. So red candle. As usual, open is the left side dash, close is the right side dash. This is universal in nature, very basics. I do not want to spend too much time on these aspects because we are not here to do these things today. The Japanese candlesticks were invented by rice traders in ancient Japan. There was a time, friends, I used to extensively use a particular moving average indicator, which was called as the 20 and 100 EMA indicator, fueled with a concept called pocket pivot. Okay, this was a concept which I learned from one of the disciples of William O'Neill, and it was working well. So that was not used for trading. That's a different way of trading in the moving averages also. Not that, every time you have a moving average crossover, you take a trade. No, it doesn't work that way. And after some time, I came across Ichimoku. Ichimoku was again one of the fantastic indicators designed by the Japanese themselves. The same rice traders of Japan invented Ichimoku. And Ichimoku was much better than a indicator like an RSI or a moving average, because it had a view of the past and the future. And I used Ichimoku for almost 3 years, 4 years. And finally, I jumped into price action, and I concluded that there is nothing as precise as price action, and I finally landed in price action. Okay, this is my journey. I am a man who started with indicators, and I went to jump to Ichimoku, and from Ichimoku I finally jumped to price action. So Steve Nissen made this book popular in US. Okay, it is much superior to any of the chart patterns that are available today because of its extreme clarity. When you look at the candles, you will really understand what is happening. Okay, so we are going to use only candlesticks charts in the entire journey of our price action trading. I hope everybody knows that this is a bullish candle. Okay, so this is a bullish candle, this is a bearish candle, and I hope everyone understands why that is bullish and why that is bearish. Okay, the green candle, the open started at the low bottom and closed at the top. The red candle open started at the top, closed at the bottom. Okay, similarly, open, high, low, close. Clear, friends? So next, let's move on to the next level of candlesticks definition. Now, the rectangular box that you see from the open to the close, okay, is called as a body. It's called as a body of the candle. Whether it is a green candle or red candle, it doesn't matter, because in a green candle the open is at the bottom, close is at the top. In case of a red candle, open is at the top, close it at the bottom. So it doesn't matter. The length is called as the body. And there is something called as wick at the top. The distance between the close to the high of a green candle or the open to the high of a red candle is called as an upper wick. In candlesticks language, they use wick. Some people call it shadow also. Based on my experience, I prefer calling it wick. Okay. Similarly, the distance, the length from the open of the green candle to the low of the green candle, or the close of the red candle to the low of the red candle, it's called as lower wick. Yes, it can be called as wick, it can be called as shadow, and some do call it tail also. Okay. So is it clear, friends? Anybody having question, buzz me right now. It's pretty simple and straightforward. Great. So I assume everyone understands this. Let's move on to the next. Candlesticks give lot of insights on various aspects of price action, but there are many times candlesticks don't tell some information. So what are they? So we have a bullish candle there, which has, as usual, the open, high, low, close is defined. I have marked all the 4 lines to depict the 4 levels. How did this candle form? This is a beautiful green candle. It is a bull candle. We all know, opened at the bottom, closed on the upside. It formed a high, it formed a low. Agreed. But what was the journey this candlestick took in order to become this complete candle? Let's take a scenario. Let's say it opened, right? From the open, it formed a high. Possible? Price opens and it directly keeps going up. It forms a high and it stops there. And from there, it might come down. It might come down to the bottom and it might form a low. And then it reverses from there and finally closes at the closing price. Is this clear? This is the path that this candlestick has taken. It opened, it formed the high, it came down, it formed the low, and finally it again went up to form the close. So any questions here? Buzz me. If nobody buzzes any questions, I assume everyone understood this. All right. Now, let's see the second scenario. The price opened, as usual, the same point. Instead of making the high, the price made a low. And then the price went up and formed a high. And then price came down and formed a close. Friends, in both these cases, the candle is the same candle, the same green candle. This is the only factor which you as a trader will not know, whether it formed the high first or the low first. The price can form high and then low, or it can form the low and then form the high. Both are fair and correct. This is one aspect that is never visible in a candlestick. If you guys understand, we will move on. I will wait for 10 seconds for any question. If there are no question, we will continue. So meanwhile, there was a question asking, what was your experience with Ichimoku in terms of, I really enjoyed Ichimoku because I was more of a techno fundamental investor. When I started investing, over the fundamental aspects which we learned in the first module, I superimposed that with Ichimoku on the technical studies. Once I discovered WD GAN and price action, I left Ichimoku because I found those methods to be much more superior because they were all purely based on price. Now, let's talk about blending of candles. Friends, we have a red candle first. Okay. There is a red candle. and suddenly next to that red candle there is a green candle. So what is that green candle? Can somebody explain what has happened with the green candle? The price came down in the red candle and the price gapped up slightly above the close of the red candle and went above. Okay, and then let us do this. If I want to merge these two candles, what would be the combined candle look like? For that, we all started with the first candle, right? So whenever you are blending a candle, blending is nothing but joining, combining two candles to form one single candle. For blending, we'll always take the open of the first candle, the highest high of the two candles, the lowest low of the two candles, and the close of the last candle. Okay, and then we will assemble it. So what we did, we took that open, we took the highest high of the two candle, we took the lowest low of the two candles, and we also took the close of the last candle. So since there are only two candles here, we have to take the close of the second candle. And now let me put the block. What would be the output? So how to draw the combined candle? Very simple. You know that open to close or close to open is the body of the candle. If the open is below and the close is above, every one of you know it's a green candle. If it was opposite, it would have been a red candle. So the close to high is the upper wick. In this case, the open to low is the lower wick. Okay, and the output is called as a pin bar. This kind of candles are called pin bars. Is it clear, friends? I'm going to wait for another 10 seconds to make sure that everyone understood. Any questions? Shoot me right now. Awesome. So which means these are all very simple. There's a quick request for a repeat. There are two candles. One is a bear candle, which is the red candle, and followed by a bull candle, which is a green candle. Now we need to assemble these two candles to get a combined candle. For that, the rule of blending is take the open of the first candle, take the highest high of all the candles, take the lowest low of all the candles, and take the close of the last candle. In this case, the close is the second candle, and hence we took the close of the second candle. And we plotted the lines there, and those are the open high low closes that we consider in creating the combined candle. And the combined candle looks like the one on the right side. And we clearly discussed already that body is the distance between the close to open, and the close to high and the open to low, they are the wicks of a bull candle. Okay, so we are extensively using candlesticks in all our conversations. We are not going to use any kind of other concept, something like Heikin, Ashi, and so on. Okay, friends. Now here is an example. Okay, this comes from stock charts. We picked it from the internet. So this the first example is about, let me take a marker. Okay, there are three candles. Okay, there are three candles there. When you assemble, what did that guy do? That guy took the first open of the candle. Okay, and he took the lowest low of the three candles. He took the highest high of the three candles, and he took the close of the last candle and created the one big strong momentum candle. So what is momentum candle? We will discuss about it. So don't worry about those concepts. And you might see lot of uh, technical jargons at the bottom, like hammer, bull, bearish engulfing, shooting star, cloud, blah blah blah. So guys, don't worry about all that. Okay, so those you don't have to remember any of those things as far as price action trading is concerned. Okay, see the next candle. See, come to this one. This is an interesting box. So there, this is the example which we did. Correct. Right now, this is the example which we did roughly. The same example which more or less we showed in the previous candle. Okay. Now let me take this lovely example. I'll take this example. This is an interesting thing. There is a strong bull candle, and immediately the price gapped up. Friends, it gapped up. See, the price opened here. The price opened here. The second candle price opened here, which means the open was much higher than the close. So that is called as a gap. And then it fell down to a particular point. So what do? We take the open of the first candle. We take low of the combined two candles. We take the high of the combined two candles. We also take the close of the two candles, and finally the open to close becomes our body, and the remaining points we just join to get the wicks. That is how the combining happens. So 10 seconds I'm going to wait. If I don't hear any questions, we are going to jump out to the next steps. All right, so in fact, as far as lowest close of the two candles, no, the lowest low of the two candles, you need to take the open of the first candle, the close of the last candle, the lowest low of all candles, the highest high of all candles. Yes, open and close becomes the body. Open and close becomes the body, and the rest becomes the wick, which are nothing but the shadow or the tails. Yes, open is always the open of the first candle. Close is always the close of the last candle. Low is always the lowest low of all candles. High is always the highest high of all candles. Great. Sounds good. So let's move on.